Some trading now. Thanks, Mike. Let's get Scott Bauer in here, CEO of Prosper Trading Academy. Scott, what do you think? Netflix looking for a bounce here at support or going to extend this bear market?
You know, I think it's a big crapshoot, Oliver, actually. But there is a lot of support in this stock down around 490. If this thing sold off here, that's an area I absolutely want to be a buyer. The market, the option market's pricing in a move of about $35 or about a 7% move or so. I actually think that on any sort of beat, and now beat, kind of have to understand what that may be because the expectations are not real, robust for this report. But on any sort of beat or any sort of, better than expected outlook, I think you could get a real quick short covering rally here. So what I'm doing is I'm actually playing both sides here. I'm selling an iron condor with next week's expiration. What that means is I'm selling a put spread down at the 490, 485 area. I'm selling a call spread also up at the 590, 595. So I can collect, somewhere around $2 for that. That break even for me at the end of next week would be 488 to the downside, 592 to the upside. Obviously a very, very wide range. This is biased towards the upside. This is bullish in a sense because there is more room to the upside here. But again, I really like this because that 490 area, I'm a big buyer. I think you could get a very quick snap to the upside here on any sort of surprise.
Looks like the market's trying to snap higher this morning. So if Netflix can follow through it, that sentiment, to your point then. So you've got a lot of different sections to this, Scott. Take us through them again here because you're selling the iron condor and there's obviously two wings with two contracts each.
Yeah, exactly. I mean, I'm selling a put spread, selling a call spread. When you do that, ideally, you just want the stock to remain in a range. You want the stock to be anywhere at expiration between the short strike. My short strikes are 490 to the downside, 590 to the upside. But because I'm doing this as spreads on each side, even if there is a blowout number, right, whether the stock goes to 300 or the stock goes to 700, my maximum loss on this is $3. I am absolutely 100% risk defined for a blowout move. I love collecting this premium going into earnings.
Cool. I think it makes sense. With Netflix, holding on above $500 for so long, I mean, there'd have to be some major bad news for Netflix to get below your lower strike there. I mean, and you're giving it a little bit of breathing room around 500. So you have to have an absolutely explosive report for this thing to go against you that way. I guess if they tell us some big surprise with some gaming plan, the stock rallies, I don't know. I mean, it doesn't seem like you're at much risk of getting blown out to the upside either. When they did announce that price hike, the shares went up and it came right back down. So if that's any indication, there's not a lot of appetite for, a 10-15% move higher either.
No, absolutely. And if you look at it mathematically, and I know a lot of your viewers, that's what they're doing here.
For sure.
Expected move, the market maker expected move being $35. Okay. That is equivalent to a one standard deviation move or a 68% probability. If we go to that upper end of 590, that's basically double that. That's a two standard deviation move, which is like a 92%, probability against that. So the odds are in my favor here. Can a blowout happen? Absolutely. Anything can always happen, but that's exactly why I'm trading this risk defined.
Thank you, Scott Bauer. Always appreciate the details in the trade. CEO of Prosper Trading Academy, getting ready for Netflix and looking for a range to hold within this stock after its big decline.